In this video, we will be considering what financial accounting is and why it is prepared, in addition to thinking about the uses of financial information and the usefulness of that information. Before starting this video, please be sure to like this video if you found it useful, comment below with any topic suggestions or questions, and subscribe for more accounting content. Firstly, we will look at what financial accounting is. To define financial accounting, we can interpret that financial accounting is the process in which financial information is transferred into financial reports to allow users to then interpret that information for decision-making purposes and informative purposes. The source of financial information is from double-entry bookkeeping, which is the basis of accounting for transactions. You can watch the related video in the link below, which is about debits and credits in bookkeeping. Financial accounting is used to allow users to interpret a company's financial performance and their ability to generate value. You might be thinking, who even cares about financial information? Well, there are many users, both internal and external to a particular organization, that have an interest in understanding the company's financial performance. The best way to understand this is to put yourself in the position of one of the users mentioned above. For example, if you're a shareholder who has invested a large sum of money into a company, you'll want to assess the financial reports to see how well the company is performing in generating a return on your investment. If you're a key supplier in a particular company, you'll want to assess the financial performance of that company, particularly any long-term debt, to interpret the ability for the company to pay for services under your contracted credit terms to receive payment. Pause this video and go through the list to think about the mentioned users from their perspective. Financial information is all well and good to assess, but there is also qualitative characteristics that need to be considered when assessing the usefulness of presented information. The breakdown provided here is taken from the technical perspective of accounting from the International Accounting Standards Board. There are two fundamental characteristics of qualitative information, which is relevance and faithful representation. Relevance can be broken down into three elements. Predictive value allows users to interpret the future likelihood of events. Confirmative value allows users to analyze reported data with earlier predictions or budgets, and most importantly, materiality is the ability to interpret the magnitude or significance of a particular transaction in the perspective of different users. The second fundamental characteristic of faithful representation, which considers that information is complete in its entirety and that it is neutral, in essence being free from any bias, and most importantly being accurate and free from any errors. The enhancing characteristics of useful information follows the fundamentals. Comparability considers how comparable the reported information is with competitors, industry benchmarks, and historic performance. Verifiability considers how verifiable reported information is to present users with credible data. Financial information is commonly verified by annual audits from professional auditors who assess the performance of different organizations from an independent and unbiased perspective. Understandability refers to how clear information is for different users. Timeliness considers how quickly information is presented to allow users to make decisions in a timely manner. Next, we will consider what are the key reports which are used to interpret financial accounting. There are three key financial statements, which include the statement of profit and loss, which is used to assess profitability, the statement of financial position, which is used to assess company value from invested equity, and finally the statement of cash flows, which looks at the passage and the source of cash within an organization. There is also the annual report, which combines financial information and non-financial information to give an extensive breakdown of a company's performance on an annual basis. Annual reports are required for release to the general public each year for public limited companies or multinational firms. You can search up any big company that you might know of and search for their latest annual report to get an idea of what sort of information is presented and to consider which potential users would find different parts of the report useful. In summary, we have considered that financial accounting is the process of recording and illustrating financial data through financial reports to allow users to then use that information for decision-making or informative purposes. There are different users of financial information who have different needs, expectations, or perspectives when interpreting a company's performance. Put yourself in the perspective of any of the key users mentioned earlier to question and understand what sort of information you would want to see from the financial reports. There are also qualitative characteristics characteristics that need to be considered when interpreting the usefulness of information for users. This includes relevance and reliability as fundamentals, and comparability, verifiability, understandability, and timeliness as enhancing characteristics. The key financial reports include the statement of profit and loss, the statement of financial position, and the statement of cash flows. The key combined financial and non-financial report for multinational corporations is that of the annual report. Okay, well that's the end of this video. Be sure to like if you found this video useful or informative, comment below with any topic suggestions, feedback or questions, and subscribe and turn on the bell icon to be informed with any of the latest content. Thank you for watching.